Hi there guys, my name is Jacob and welcome back to my channel. Now, with interest rates at seemingly record levels for around 16 years, I believe, Bank of England rate is currently a 5.25%. This is having an impact on a lot of things for people, and one of the biggest ones is housing. A question I have heard people ask a lot lately is, should I buy a house whilst interest rates are still high? And I think this is a very interesting question to try and tackle because it isn't as clear as people might think. Most people just say, no, wait for the interest rates to come down and then think about purchasing a house. However, there are benefits to interest rates being high. So I want to kind of just go through some of those benefits, as well as obviously interest rates being low, and just kind of see maybe what the best thing is to do. But with interest rates being high, you end up paying a lot more interest back to the bank than capital repayment to pay off your house, especially in those early years. But as I've said, this isn't the worst thing in the world, because as interest rates are high, you may or may not have noticed, but I certainly have, in my local area at the moment, because interest rates are so high, the housing market is very stagnant. Houses are coming on the market and they are staying on for months. There are some lovely houses that I looked at around a year ago when I was looking to buy, and a couple of them are still on the market today. There is nothing wrong with these houses. They are lovely. But the problem is they're expensive houses, and because interest rates are so high, it deters people from buying them. And of course, that means the seller is having to reduce the price. They also lose bargaining power, because when houses aren't selling, sellers have no option but to reduce the price, and it becomes a buyer's market rather than a seller's market. Unfortunately, when I purchased my house just over a year ago, more like 18 months ago, it was most definitely a seller's market. Houses were coming on the market on a Monday morning, and you were lucky if they were still there by the end of the week. You were lucky to be able to get a viewing and be able to put in an offer before the house disappeared. But like I say, a little over a year later, and that market has changed massively. So if you are a buyer looking to purchase a house right now, yes, interest rates are high, and this is of course going to affect your payments back to the bank. But if you can afford those payments, let's say for the first 2 years, then it may actually be a really good time for you to get out there and purchase a house, because at this moment in time, you've probably got the most negotiating power that you're ever going to have buying a house. Because if houses aren't moving and sellers want to sell, they have no choice but to consider the offers that you put in. And you could undercut the asking price by maybe 5, 10, I've seen in some cases even 20%. And if a seller is desperate to sell, then you might just get the offer accepted. And I've seen this happen with a few friends lately who ended up getting an absolutely fantastic deal on a house not far from me. And, you know, that's the market we're in at the moment. Of course, some of the trouble with high interest rates is banks lately seem to be lending less money to people. I've seen it happen to a couple of people recently where they had a figure approved from the bank that the bank would lend them. And then suddenly the bank have changed the terms on them and suddenly said that they won't lend them as much anymore. And it's completely flipped their house search on its head, because the houses that they were looking at, they can no longer afford now. So again, this is one of the trickier things with high interest rates. Banks are kind of trying to protect themselves by not lending people as much money. Again, this is something you have to factor into your search. You also have to factor in how much of a deposit you've got. Because if you've got a bigger deposit, you can obviously afford to throw more money at it and not lend as much. But if you're trying to buy a house, maybe you're a first-time buyer and you have a limited deposit, and then suddenly the bank says they're only going to lend you a limited amount of money, that is going to make your house search very difficult. But as interest rates start to come down, banks will probably start to lend more money, and they will loosen up the kind of restrictions that they put on that money. And one of the reasons why I think buying a house now is probably a good idea is because if you've been following interest rates lately, it seems, now this isn't guaranteed, but it seems as though we're kind of on the precipice of interest rates starting to come down. The latest Bank of England interest rate decision was to hold the rates, but it is widely accepted. If you go on the internet and do some research, it's widely accepted that those interest rates decisions in the US, UK, and Europe are all expected to start declining in the coming months, maybe even as close as next month, when the next decision is made on the Bank of England interest rate. So if that happens, you may start to see the housing market become a lot more liquid. And what I mean by that is it will perk up the interest in houses, meaning as a buyer, suddenly there are a lot more people looking to buy. That makes your kind of search for a house a lot harder because you're competing with a lot more people. The high interest rate at the moment is putting people off. So if you're in a position to buy right now, you've got a lot of choice with the houses on the market, but not a lot of competition. So if you were to put in an offer and no one else is competing with you, there's a far more likely chance of that offer being accepted, or at least somewhere around that offer being accepted, than if 5 or 6 other people were competing for the same house. So it's a fine line, I believe, that at the moment I think is almost maybe a sweet spot. But if those interest rates start to decline, you may see houses start to come off the market very quickly as interest perks up and people who were holding off buying a house suddenly come back to the market and are ready to purchase. Equally, it also might spur people to sell their house, because as they see the market pick up, you might find that people realise that and want to sell their own house. So that is also a possibility as well. So you might see more houses come onto the market. Another key aspect of high interest rates is because houses haven't been moving, the valuations for houses have been coming down. So over the last year, houses that have been, valued at around, say, 400,000, I've seen a few in my local area, they're down to near 350 now, because those sellers can't shift that house and they're having to lower the price month after month after month to try and generate interest. So again, at the moment, there are deals to be had, and there are good houses out there that are far cheaper now than they were a year ago. But again, I come back to that point of, if interest rates start to come down, those prices will go back up, and you will find houses becoming more and more expensive, because that is what happens when interest rates come down. The housing market valuations tend to go up. So they tend to go the opposite way. So again, I do think we might be at a sweet spot where at the moment, you could be able to get a pretty good house for a good valuation. And if those interest rates start to come down and valuations go up, it could be the perfect time to seal a deal on a house and then feel the benefit of valuations going up over the coming years as interest rates start to come down. But of course, interest rates coming down is not guaranteed. But if you do your research, which I'm sure you will, I think you'll find that it is widely accepted that that is probably what is going to happen. Now, one of the first points I made in this video is, I think it is important to remember you have to be able to afford the repayments at the moment. And obviously, if you were to secure a house now, you would be securing it with a fairly high mortgage rate, potentially around the 5% mark. But what is key to this is, if you can afford those payments right now, and let's say you locked into a 1-year deal or a 2-year deal, I certainly wouldn't recommend locking into any more than that, because as I said, interest rates are expected to come down. But if you could lock in for, say, a year or two, you would most likely, by the end of that deal, you would be looking at those repayments coming down, because you would end up being able to remortgage at whatever the rate is in a year or two's time, which, as I said, is widely expected to be less than what it is today. So as long as you can afford those payments for that short first period on your mortgage, then you'd be able to secure a house for a fair valuation, be able to benefit from the increase in valuation when interest rates start to come down, and also you could be looking forward to paying quite a bit less on the mortgage once you remortgage in a couple of years' time. And then at that point, I would probably look at remortgaging and locking in a longer term deal at that point, once interest rates have come down to a more consistent level that is more affordable for people. So as you can see, there are a number of benefits to mortgage rates being high. Don't get me wrong, interest rates being high is tough for everyone, but there are ways to capitalise on the situation, and I hope I have made some form of sense by just laying it out there in this video. But I hope you enjoyed the video. If you enjoy this type of topic, let me know down in the comments, and let me know what your opinion is of the housing market right now and what you would do. And guys, if you enjoyed this video, please hit the like and the subscribe button, and I'll catch you in the next one.